if you stack enough layers of incentives, you can potentially get up to 80% of the project paid for with tax credits and other programs. So it's but it's very time intensive and a big learning curve to get into that business.
Yeah. Not just time to go and do the research to execute, but even, execute, you make that submission for the grant or for that benefit. And it's a lot of waiting.
Yeah. A lot of waiting.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Chris Bogenrief here on the show. Chris, welcome.
Thank you, Neil. Appreciate the opportunity.
I'm excited you're here. Say, for the audience's sake, who are you? Where are you from? What do you do?
Chris Bogenrief, president of NAI United in Sioux City. Yeah. So we cover the tri-state market over in the Sioux City, Iowa, Nebraska, South Dakota area.
Yeah. Where'd you grow up?
I grew up over on a farm in Kingsley, Iowa, which is not too far from Sioux City, and then ended up going to junior high and high school up in Hampton, Iowa, north central Iowa, close to Mason City up there, and then went back to college in Sioux City at Morningside University and stuck around ever since.
Okay. What'd you study in college?
Business. Studied business. Didn't have a clue what commercial real estate was at the time, but that came later.
Yeah, exactly. Well, so you get it, you study business, you get out, and what do?
Yeah, I got out, worked for a downtown development organization promoting downtown with a SMID district. It was tax dollars generated to promote the downtown. So I worked there for a while. Then I worked for U.S. Congressman Tom Latham when he was in office. And then I went to work for Dakota Dunes Development Company, which was a subsidiary of Mid-American Energy. So Warren Buffett actually owned it indirectly. So that's a 2,000-acre master plan community just across the border in South Dakota that was developed by the utility company to promote economic development in the Sioux City area. Back in the 80s, during the farm crisis, things were really tough in Sioux City. They knew they had to do something to try to reverse the trend. So it was IPS at the time, Iowa Public Service, before it became Mid-American, and they bought up 2,000 acres right over the river and built the Arnold Palmer Championship Golf Course and 2,000 acres of business and residential parks. And so I worked for them for about 8 years. And that's when I became familiar with commercial real estate. Because I was recruiting developers and I was knocking on doors in Des Moines and Minneapolis and Kansas City trying to get developers to speculate in South Dakota.
You had the ground. You were trying to move the ground and get people attracted to the development thereof.
Right, right. Recruiting companies, recruiting developers, and that's where I got my foot in the door with commercial real estate.
Okay.
So,
and then you were there 8 years?
Yeah, about 8 years. So I got to know a lot of the developers and real estate folks in the region. And so after about 8 years of that, I knew I'd eventually sell myself out of a job because once the land was gone, you'd be done. Yeah. So I was always looking ahead what to do next. And that's when I connected with some real estate folks, Dave Davenport, actually, at Century 21 Davenport in Sioux City. And he helped me get into the business and been in it ever since. You know, those first few years are always the toughest. And it's a risky time, but it all worked out. Things were growing at that time. So,
what year was that?
Boy, that would have been 2003.
2003.
When I started with Dave Davenport.
Okay.
And then
talk to me about those first few years.
Yeah, the first couple of years, Dave gave me a subsidy to keep me afloat for those couple years. And the goal was you make enough in commissions to pay him back that subsidy. And it all worked out. And then 2 years later, started my own firm. It's called United Commercial. So really have had my own firm since 2005.
Yeah. Just past 20 years.
Yeah.
Congratulations.
Yeah, thanks. And so, we're a traditional brokerage, but we've also done a lot of development work too. I've partnered with my uncle, who was a general contractor, and we've developed a lot of properties on the Iowa and South Dakota side both.
Yeah.
And so to me, that's the most fun part of the business is the development side, but the brokerage is fun too.
Yeah. What gets you excited about development specifically?
Just being able to identify value added properties and turn them into something that maybe others might not see.
Yeah.
And I think that's the most fun part. And just building equity, being able to build equity and not just do transactions and commissions, but be able to build equity in real estate, obviously, as you know.
Yeah.
It's what you do as well. So yeah, that's my favorite part of the business, is being able to participate in developments or put together investor groups to identify value add properties.
Tell me about the first one you did.
Boy, the first one. Well, we bought an old Meineke service station downtown, and it had closed, vacant, and it's hard to find buildings in the central business district that have good parking.
Sure.
This one did, so we converted it to office, and it leased up right away with 2 tenants, and it was a bunch of garage bays, and we turned it into a lot of glass and natural light for office tenants, and it's had the same 2 tenants since we opened many years ago.
Tell me about your most challenging one.
The most challenging ones, we did a building downtown Sioux City. It's called United Center now, but it's a 90,000 foot warehouse, grocery warehouse, from the early 1900s.
Okay.
And my uncle had some expertise in restoration. So, that's a 6-story brick built really well. So the bones were good.
Yeah.
But, turned it into mixed use. 3 stories of condos, residential condos on the top, and then 3 stories of office on the bottom, underground parking right in the heart of the CBD. So that was a challenging project because that started in about 2000. And then you know what happened after that. And so it got a little difficult with the financing through that period. But in the end, private equity group came in, took out the bank, kept it afloat because they knew it was a good product, and it filled up. And that thing is, condos have sold, and in fact all the office condos sold and all the residential condos sold. So we've just retained a few of those office condos over the years. But
what a monster project. I mean, that very large, very involved.
Yeah, there was a twin building to that actually downtown Des Moines. I think it was called the Warfield Pratt and Howell.
Okay.
And so there was a warehouse in Sioux City and a warehouse in Des Moines, and I think they did something similar in Des Moines as well. But that was a fun project.
Do you run any of the construction? Do you outsource? What's done in your world and what's outsourced?
Yeah. So my uncle, he's the general contractor, and he has a lot of crews himself, but a lot of the plumbing and electrical and HVAC and the licensed trades are usually outsourced. Sure. And then, of course, projects like that involve tax credits. Yeah. So we're using a lot of historic tax credits, investment tax credits, all kinds of layers of incentives to make a project like that work.
Yeah. The cap stack is very involved with that kind of project.
Yeah. And I've heard some guys, can get up to, if you stack enough layers of incentives, you can potentially get up to 80% of the project paid for with tax credits and other programs. So it's but it's very time intensive and a big learning curve to get into that business.
Yeah. Not just time to go and do the research to execute, but even, execute, you make that submission for the grant or for that benefit. And it's a lot of waiting.
Yeah, a lot of waiting. Or you might be waiting for workforce housing funds, and you get in the pool, and you might not get it this year, but you might get it next year. Right. So there's a lot of It's a waiting game to get in on all the incentives.
Talk to me about your lens. As you look through it today, how do you make decisions on what projects that you'd want to tackle, what to avoid?
Yeah, well, we speculated on a 30,000 square foot office building, Class A office building in Dakota Dunes, South Dakota. And that was about 2017, through COVID and some of those changes in office. I probably wouldn't spec another office building again.
Sure.
I might buy a existing office building at a good price and, add value. speculating on a Class A office in a market our size is tough. So that was probably our toughest project, just because what happened with the office market.
Sure.
So that one was, but you learn a lot through those projects too. But, if I were identifying today, I would be picking industrial, multifamily. Even retail is pretty strong lately because it's been so underbuilt for so long.
Sure.
So I'd probably migrate towards those property types in today's times. We're very underbuilt in industrial, multifamily, and even retail in our market.
Yeah.
So those are kind of the ones that I migrate towards now.
You didn't work this hard to earn next to nothing on your money. Savings accounts barely move the needle. Tech stocks, AI stocks, it kind of feels like Vegas out there right now. Rentals, too oftentimes it means tenants, toilets, termites, and not the cash flow you were thinking. Well, so I've got an alternative. Little Guy Loans Co-Lending Fund. Qualified accredited investors are earning 10 to 11% annual passive returns. It's paid quarterly by co-lending with us alongside me on short-term first lien real estate loans right here in the greater Des Moines area. Your money's backed by a real property, not promises. It stays close to home. We've successfully funded well over $10 million in loans right here in central Iowa. So if you want steady income without headaches, click the link below in the show notes. Let's connect. We'll see if it's a fit for you. Talk to me about the uniqueness of being a border town, the fact that you've got really 3 states right there.
Yeah, it is unique. In fact, I was just hired as the site selector for Sioux Honey Association. So the Sioux Honey, they had some issues out in California where they had to upgrade their plant because there's heavy restrictions and the building codes are very strict out there. And they got to looking at it and they thought, why don't we look at, scrap in California and maybe even our East Coast plant? Why don't we just put everything in the Siouxland area? Yeah. So they decided to do that, and they're planning to build a $130 million campus now in Siouxland. And what we did was we actually went to all 3 states, and because, their employees can drive anywhere in 10 minutes.
Yeah, correct.
So it doesn't really matter which state they're in.
Yeah.
So being on a border town, it's unique because we actually did RFPs to all 3 states, Iowa, Nebraska, South Dakota. They all partnered with developers that had the land, ability to build a building, and they all 3 states came forward with their proposals. And we had to look hard at them. And Iowa had to really step it up because the commercial property taxes in Sioux City are double that of South Dakota and Nebraska. So Iowa had to come up with quite an incentive package just to level the playing field. And I think the company wanted to stay in Iowa, but didn't need to. And so fortunately, Iowa came to the table and made it equitable. So they are going to build a $130 million campus on the Iowa side. So that was a fun project, but that's one of those unique things about being in a tri-state area.
Right.
So some of these, I know they've had what do they call it? Like they have special legislation for border communities to make them competitive. And I think they may be phasing those out, but it was basically withholding tax credits they would forgive for companies that were thinking about jumping the border.
Sure.
But now they've got other programs to help offset that.
Yeah, because there are material differences, especially when you're up in the corridor you're in. I would imagine, if you're on the other side of the state and you got to compete against Illinois, it's probably a different story.
Right. It's a little bit the opposite on the Illinois
correct.
side. So they don't have to worry as much.
No. But
now maybe in Council Bluffs, they've got Nebraska.
That's right.
They can jump over to Nebraska. Yeah. So it's important there, and it's very important when you're bordering South Dakota. So and Minnesota probably not as much of a threat with their tax climate up there.
Correct.
So but where we're at, it definitely is a factor.
Where population wise, I'm curious, how do you see that playing impact in real estate? Or do more people live, or are they drawn to today one community? I say one community, really one side of the border versus the other. And how does real estate play a role in that factor of where one chooses to live?
Yeah. So on the South Dakota side, it was driven a lot by the medical community, because if these doctors could move their clinic over to South Dakota and move their homes over there, they would get an instant 9% raise because they'd save 9% of their income tax.
State income tax. Right.
So it was a huge deal.
Right.
Now, Governor Reynolds has really leveled the playing field a little bit there too and dropped the income tax down to 3.9%, I think it is. So it's not 9%, but it's still 4% that they saved by crossing the border. So a lot of the drivers was medical, a surgery center was built over there, and then that attracts homes because you can't take advantage of the tax climate unless you live and work in that state. So that was a big driver. Tyson, obviously IBP, which was later bought by Tyson Foods, they saw that benefit too, and they built their world headquarters over on the South Dakota side. And then in the last couple of years, they absorbed that back down to Bentonville, Arkansas. So we're sitting there. I'm trying to sell their 220,000 foot world headquarter building, which is tough in a tertiary market.
I can't imagine, yes.
Even the tax climate's great, but that's a lot of office space to absorb. That's our biggest vacancy in the market.
Sure.
And other than that property, our vacancy is pretty low. But yeah, there's a real draw for the saving of the state income tax over on South Dakota side.
What is unique about the Siouxland area? What draws people there, investors there, speculative investors there? I'm thinking, if you think of Iowa as a primary market, Sioux City up as a secondary market here in the state, and arguably maybe Iowa City would argue they're also a primary market, right? Just given that the whole corridor over there. What's the draw, and what does the Siouxland have going for it itself?
Yeah. So Siouxland is a very stable ag economy. We've got lots of food processors. Some of the names you're familiar with: Sioux Bee Honey, Jolly Time Popcorn. Tyson's flagship beef plant is in Siouxland, right over the river on the Nebraska side. That's their biggest beef plant they have. Cargill's a big player there. There's just Wells Blue Bunnies just up the road in Lamar's. The ice cream maker just bought by Ferrero Rocher out of France, but very large food companies there. So it's more blue collar than Des Moines is, but it's very stable, and stable because of the food economy. Even if you have a COVID or something, you got to have your food. Yeah. And so we just kept running everything all through that. And so we don't have the ups and downs, maybe even as much as Des Moines might, but it's very stable, but we don't have as much appreciation. So it's just a very, we might get 0.5% to 1% a year appreciation on real estate. So it's not.
It's a great cash flow market.
Yeah, it's good cash flow if you can find something for that. It's real stable. So yeah, so it's and it's a regional draw. Our trade, so our MSA is probably about 150,000, and that's a 4-county area. Sure. But our trade market for retail is probably 450,000. So it's a pretty big draw. And we draw a long ways to the east and to the west. So out to the west in Nebraska, towards Fort Dodge to the east. Yeah. But then we're kind of sandwiched between Sioux Falls and Omaha on the north and south. Sure. So we only go about 50 miles north, 50 miles south, but east and west, it's a wide market. Yeah. And so, being a stable market like that, we are small, but I think there's opportunities for outside investors. As an example, we have not had any locals willing to step up and speculate on large industrial space. So recently, we just had a company, Nelson Engineering, out of South Sioux City, Nebraska, just put up a 100,000 foot spec building. And before they even broke ground, they had 2 tenants take the whole thing.
Wow.
And that's how underserved we are. Sure. I know Des Moines has a lot of high bay warehouse probably sitting on the market right now, but we are so underserved that I think there are opportunities for outside developers to come in because we've been underbuilt for so long. And we've just had an NAI Midwest conference, and they were saying that, Des Moines and Sioux Falls are probably a little overbuilt right now, but Sioux City and Omaha are way underbuilt on almost everything. And
all asset classes?
Yes, across the board. Yeah. So I thought that was interesting. So I guess we're underbuilt. We need more developers.
Sure. Yeah. Yeah. Well, tell me about just, the current state of the market that we're in.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
How are tariffs playing out? What do you see that impacting, with obviously the underlying business and then the next level up is the real estate?
Yeah, tariffs have made it a little interesting. It feels a little weird right now, but for the most part, I don't think it's not a game changer, but there is a lot of caution with a lot of our manufacturers and our suppliers, and that maybe they're holding back on doing an expansion or holding back on doing another location just because of the unknowns of the tariffs. But we haven't really lost any companies due to the tariffs that I'm aware of. But yeah, it's kind of a weird market right now with the tariffs going on. And when you put the tariff unease on top of the interest rates, on top of the construction costs, makes it a strange market.
No doubt. No doubt about that. Yes. Take me back to developing. What are the top 3 things you wish you knew now, or you wish you knew back then 20 years ago that you know now?
Yeah. Well, as I mentioned, I wish I would have known more about the Class A spec market. Probably would have steered clear of that a little bit. Just understanding the cap rates on the back end. It's always nice to be able to do a project that you're willing to hold or willing to sell at a certain cap rate. So it's my knowledge base of that has helped a lot to know that you don't have to develop this to sell. You can develop it to hold, and you just got to understand where the market's at when you do it, so that you come out okay either way, but be willing to be a long-term hold if needed. Yeah. It's got to be a good enough deal to be able to hold on to it. That's probably one of the things I've learned over the years.
What's your favorite project that you've done?
That United Center was a favorite. We did another one, bought an old historic 4-story building and used tax credits and leased 100% of it to a law firm that had been in town for over 100 years as well. That was a fun project. Trying to think of another one that we've done. We did buy it was basically a Gateway Country Store strip mall on the South Dakota side. Ted Waite had owned it. He had founded Gateway Computers. And then when Gateway Country Stores closed, he wanted to get rid of it. And so we bought it at a good enough price where we basically re-tenanted the whole center. It's about 22,000 feet, but we were able to attract a food laboratory, and they do testing for a lot of the packing plants. And in fact, they've changed hands 3 times, I think, since we put them in the building, and they've since taken the entire 100% of it. And now they're owned by a Swiss company. So that transition through the vacancies, getting it filled back up, and now owned by a global conglomerate, and they occupy 100% of it. That was a fun one. Yeah. So I wouldn't mind holding on to that, but we also put things on the market just to see what the cap rates will bear. We actually just had a bidding war to get it sold. That was a fun one.
2026. What are you most excited about this year?
Well, 2020, let me step back to 2025 because 2025 was a little tough for us. And I think it was a lot of the tariffs, construction costs, interest rates. But we've already got enough in our pipeline for 2026 to feel like it's going to be an even better year.
Wow. That's great. We're recording this here in January. It's fantastic.
Yeah. Yeah. So it's early, and we can already tell it's probably going to outpace 2025.
What's changed? It seems like the sentiment has changed. I feel that here, but is that what you're seeing? Because the fundamentals, the interest rates have come down, but they're not down that much.
They're going right. They're not
6 or 9 months ago.
Exactly. They're not down that much, but they went in the right direction.
Correct. Yeah.
Went in the right direction. And I think, people have kind of figured out the tariffs and the effects of that, and construction costs seems like they've stabilized some, especially it took a few years after COVID to get back to normal, but I think that's helped. So I guess you could say the fundamentals are a little better than they have been in the last few years. So, and our food companies are still growing, and there's no lower demand for proteins and food. Keeps us humming.
Chris, you ready for the final 3 questions?
You bet.
If you had one piece of advice for your 20-year-old self, what would it be?
If I could do it over again and I was 20, I would invest more. I would buy more property while I was young, every chance I could get. Even if you're a part of an investor group, I would get into as many properties as possible, but keep the fundamentals in mind when you're buying those. But yeah, I just think there's such an opportunity in this industry that if you're dedicated and stick to the fundamentals, you can really build some good equity. And I wish I would have done even more.
Yeah. 2 books that changed your life.
2 books. Well, I have to be honest. I don't read a lot of books. I read a lot of articles, but I don't read a lot of books. So I don't have one that changed my life.
That's totally fair. Everybody consumes differently and reads all sorts of different things.
On my trade publications, I try to stay up to date on those. But
yeah. If you were cast away on an island for a year, you can only get 3 pieces of data about your investment business each and every month. What 3 things must you know every month to know how your business is running?
I'd want to keep an eye on my cash flow. I'd want to know what those specific property types in those industries are doing. Want to see where they're headed, so you know when to adjust. And you always want to keep track of where when your balloons are. But yeah, I think just knowing what's ahead, that to me is the biggest thing. If you can pay attention to the industry that property is in or your tenant's in and always look ahead, might be a good time to sell if things are changing in that industry. So you always got to stay on top of that.
Chris, I've asked lots of questions. What's one question I did not ask that I should have asked?
No, I think you've done a pretty good job. Just, I'm happy to be in, there's bigger markets, there's faster growing markets, but I kind of enjoy being in a stable market, even if it's smaller. And I like the lifestyle. I know it's cold right now, but I do like the lifestyle of the Midwest. I like the people. I'm pretty happy with being in a smaller market in the Midwest. I just think the Midwest is always going to be stable, and it's a great place to raise a family. And
so
tried to get my son to stay in my business, but he wanted to make his own path, and I think Des Moines is a great place to do it.
Stayed in the business, just a different location, right?
Yeah. Different location. Yeah. So and it's only 3 hours away, so not too bad.
Well, I appreciate you making a 3-hour journey for our conversation here today. For people who want to find you, follow you, connect with you, where can they go? What should they do?
They can just go to naiunited.com. That's our website, and find me there. Yeah, we've got 5 full-time agents over there that handle the tri-state, and any one of us would be glad to help if somebody's interested in the Sioux City, the Siouxland market in Northwest Iowa.
Links are below in the show notes for everybody. Chris, thanks for making the time.
All right. Thank you, Neil. Appreciate it.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application, or